Welcome back, everyone, to the REWI channel, Real Women Investors. Today, I wanted to share with you a few things you should definitely know before you even start looking for property. Buying the property, whether for personal use, flipping, or simply buy and hold strategy, could be an extremely challenging and an incredibly daunting task. This is why I wanted to share a short checklist for you to follow before you even consider looking for property. Talking of which, let's just dive right into it. So, number one, you need to save for a down payment. How much will you need? Well, the answer is it varies with most lenders. If you're looking to avoid the additional private mortgage insurance, which is known as PMI, then you'll have to put down 20% of your purchase price. But coming up with that sum of money sometimes can be a bit of a struggle for the first-time home buyer or even the first-time investor. So mortgage lenders have options with down payments. Or if you qualify for a special FHA or VA loans, you could be putting down as little as nothing. But I'll be honest, that 0% down is very rare. And typically on the lower end, you'll be looking at about 3 or 3.5% down as a new home buyer. But keep in mind that that really is for the buyer that plans to live on the property. We'll discuss house hacking in another video. Back to our discussion though on down money. Exactly where your down money payment funds come from will depend on the type of mortgage you're applying for. In some cases, the down payment must come from your own funds, meaning your own bank account. But in other cases, it can come from a gift or it can even be borrowed. Now, let's keep in mind that there are other costs that you'll need to save up for as well, such as closing costs. They can run between 3 to 5% of the actual loan amount. You'll also need money for prepaid expenses, such as homeowners insurance. Most banks will be able to give you an idea of just how much you'll need to have available in order to close the loan. But more importantly, they'll be able to let you know how much you're able to afford and qualify for. Save up as much money as you can before beginning the process. Keep in mind that mortgage banks will look back about 3 months worth of bank statements. So, if you deposit large amounts of cash within that look back period, be ready to explain where that money came from. Okay, number 2. You need to improve your credit score before you look to discuss your mortgage options with a lender. Mortgage lenders are looking for a good credit score, which is typically around a 680. The better your credit score is, the better interest rate and loan terms you're likely to be offered. If your credit score is less than 680, take a look at my video on increasing your credit score. I'll link it to the description box below. Keep in mind, if you haven't had any paid off debt in your name, your lender will consider you a higher risk candidate and likely end up giving you less than what you hoped for. Speaking of lenders, number 3. Make sure to bargain with your mortgage lender or bank. There is no such thing as a fixed price when it comes to purchasing a property. Think of every money quote as something negotiable, including the mortgage they're willing to give you. And more importantly, your interest rates. Don't be afraid to ask questions whenever there's something that isn't clear. A pre-approval will make you a legit purchaser in the real estate market, and not only to a seller, but also to the real estate agent as well. Lastly, when it comes to lending and how much of a loan you qualify for, we really need to discuss our last checklist point of this video, number 4. People, I cannot stress enough the importance of having a budget. Knowing what you bring in and where your money is going is key in being able to do many things, such as saving money for a down payment, knowing how much of a mortgage you're really able to carry without being house poor. And believe it or not, when you put down the numbers of what you spend, all of a sudden you realize where some excessive spending is happening. And you can then make the needed changes in order to begin building the wealth that you deserve. Well, I hope you enjoyed this short checklist of things to do before you even consider looking at purchasing a property. If you like my content, please click that like button and consider subscribing to my channel. If you know other people that might enjoy this content as well, please share it with them. Thank you for watching. Until next time, I'm Joanna Bell, and this is the REWI channel, Real Women Investors.